Hey everybody, it's Coach Collard here with Arizona Short Sale TV today.
I want to get on this one.
Oh, okay, Ryan's going to roll in with us here. ArizonaShortSaleTV.com. We are going to bring it to you straight, basically straight talk. So what are we looking at today?
We want to discuss something that comes up every single day, dealing with short sales and clients out there and the misinformation that we see. The loan mods, they don't work.
Guys, did y'all hear that?
They don't work.
What doesn't work?
Loan mods, loan
Guys,
modifications.
I'm just going to give it to you like just flat out straight. Loan modifications has been, will be, and will forever be a complete joke. It's 100% shenanigans.
Yeah.
Now, I know a lot of y'all don't like to hear that, and there's probably like 2 out of 1,000 people that actually have a successful loan mod.
It worked.
Yeah, well, yeah, like a small
people.
percentage.
Sure.
Less than 10% of all loan mods get approved.
Yeah.
And gosh, the numbers are stacking up on us now that the people that are in process per the government guidelines and all this stuff, and they're on temporary loan modifications, and they still get foreclosed upon. I mean, dude, it's crazy. It's complete shenanigans. So let's break down loan modifications, and let's talk to the consumer out there, the buyer and the seller, specifically a seller on a property that's looking at a loan mod. Why is a loan mod not a benefit for most people?
Well, first of all, usually they don't reduce the principal.
Okay.
Right? They're just, I've seen a couple of them where maybe they'll extend it from a 30-year maybe to a 40-year.
Right.
You know, maybe they'll drop
but extending it to a 40-year only adjusts the payment.
A little bit, maybe.
It doesn't do anything to the loan balance, or anything other than extend it out.
But usually the consumer sees, oh, I was paying 14 and now I'm paying 1,000. I can afford that. Let's great. We save the house and staying in.
Okay, so he just said a key word. He said, I can afford that. Let me stay in the house.
And that's basically what the bank wants to.
But let me give you the big revelation that nobody wants to talk about. Everybody wants to keep that behind the scenes. That's where the shenanigans shows up, guys. This has never been an affordability issue in the first place. Yeah, it's nice to have a lesser payment, but it was never an affordability issue in the first place. If it was an affordability issue, you would have already gone delinquent on your payments. But we already know that short sales aren't based on financial hardships anyway, so they're just loss mitigation tools. What the reality is we've got homeowners that are looking at feeding the black hole, and they don't want to keep feeding it. That's the problem. I can make your mortgage $700 a month affordable. I can make it $400 a month affordable.
For 60 years.
For 900 years.
Yeah.
You'll figure out how to not pay it if you're 270 grand underneath. I mean, that's the reality of it. I've been in the game for 12 years, since 1999. I have seen it over, let's see, that's only 11 years, huh? I got to work on my math here, but
10.
I've seen it over and over and over and over. Literally only 1 or 2 out of 1,000 people will pull themselves out of a tailspin.
Yeah.
And if they're looking that intently on having a lower payment, and the bank lowers the payment, even in a case where they do lower it, they'll still end up going delinquent or trying something else down the road. Because once that slide starts, once you start looking for the out, you got to find it. And man will always go and find it. And what's not addressed in loan modifications, except maybe 1 out of 1,000, is the balance on the property. Nobody's reducing the balances, which, you know, I'm challenged that they should anyways. They shouldn't, right?
No, I don't think they should.
I mean, it's just part of the deal. Let them lose the property, or buyers stay in it and figure it out. Yeah, that's what it comes down to. But unless you address the balance issue, when a person's $200,000 underneath, which a ton of our Phoenix market is right now, they're not going to keep feeding the machine. No. They'll get an adjusted payment from $1,940 down to $1,490.
And it looks good.
And it looks good on paper. It's, $500 savings.
Then they wake up.
4 months in, they just go, oh man.
I'm still $200,000 upside down.
That's it.
And how long do you think it's going to take to get that $200,000 back? Or will you ever, with natural appreciation, will you ever get that $200,000 back?
Ever in the eternity conversation, yes. Ever in that person's life, probably not.
Probably not.
Not very likely.
So
I mean, we're not going to shift suddenly in the next 5 years and see gangster appreciation like we did. No, we're not going to have 30 and 40% appreciation. First off, the mortgage products will never get there. Rates are going to go back up way before then. The lending products won't get that aggressive and that available again. And
now we have inventory.
Yeah, now we
didn't have the inventory back in 03 and 04
right.
They were just starting to build all the houses, and now we have all the houses that were built in Maricopa and Queen Creek in 03 to 05 and 06.
Right.
Those are all sitting on the market now. So
right. So let me say this to you guys. Based on his first statement, loan mods don't work. I understand the concept. I get it. I know all about it. Let's look at what the government's done over the last 2 years. Government came out with the Making Homes Affordable program. Total failure. Out of the numbers of people that are supposedly supposed to be eligible for it, I think less than 7% have qualified for it. Less than 7%. I mean, that's just grossly inadequate. That's just a ton of wasted
major
time.
miss.
Yeah, just a massive miss. Then they rolled out the HAMP program.
What do you call it?
Well, I call it HEMP, and then the HAFA program, which I call
The LAFA
program, because basically when you smoke hemp, you end up laughing, right? HAMP and HAFA and all these programs. April 5th this year, the big HAFA rollout happened. You know, tons of people are talking about it's going to be a game changer. It didn't even get in the game. It's still sitting on the bench, still twiddling its toes. I mean, I've talked to one agent out of probably 4,000 that's seen a successful HAFA loan mod, or that wasn't even a loan mod, a successful HAFA short sale close. So,
but on April 1st, that was it.
Oh, April 5th was the game, right? Here's the deal. Everybody, consumers, realtors, all these people out there looking for the government to do something. Somebody needs to help us. No. Get your head out and be responsible. Get empowered with better and more better information and make empowered decisions, regardless of what you do. We've got customers calling us, and guys, this is public information. Look it up on the state of Arizona. Look up the actual statistics on closed loan modifications since 2007. Out of all the people that should have been eligible. I mean, it's grotesque. It's less than 10%. And what we've seen is 3 out of 4 people that qualify for a loan mod end up in the same financial distressful position 6 to 12 months later. It's just a reoccurring pattern in here. But let's go even deeper. Loan modification. Where was I going a second ago? Gosh, I forgot my point here. I had a really strong point.
It'll come back.
That's okay. We'll work on it till it comes back. You got anything else to add?
No, I think we basically we touched on all aspects of this. It's just, guys, if you're thinking that a loan mod is going to help you, it's probably not going to help you. Unless, like you said, unless you're willing to take your principal from 400 and say, okay, now your home is worth 150 today, your new loan is 150.
Yeah, well, I'm just going to let you know that's not happening.
It's not going to happen.
Yeah,
no,
that's not happening.
No.
They might cut your interest rate in half and do all sorts of crazy stuff, but if you're real, that's what it was, the empowered decisions.
Told you it'd come back.
Thank you. So the empowered decisions look like this, guys, and I'll get back to that too. What happens if you foreclose? Are you aware that foreclosure is the worst thing you can have on your credit? People are running around going, oh, I'll just let it foreclose. They're like, no, I don't want to go bankrupt. Well, bankruptcy is actually better on your credit than foreclosure. Did y'all know that? Has anybody talked to a credit person, a mortgage person, a real estate professional, an attorney? Do y'all know that you have options? People, I'm not saying go file bankruptcy or go to foreclosure or just do a short sale to do it. I'm saying there's a situation on the board and it needs to be addressed in an empowered, informed fashion without going, oh, what's going to happen? Oh my gosh, my future. Really? Just address it right now. Address it with more, better information, right? What does a bankruptcy do to your credit? Well, it's one step better than a foreclosure. So if you're facing foreclosure already, then maybe you consider some of those other tools. We've learned that used to I could never do mix a bankruptcy and a short sale. Now you can mix bankruptcies and short sales in some cases.
Yeah.
It depends on the bankruptcy trustee, it depends on the lender, it depends on a lot of factors, but we've figured it out.
Now, correct me if I'm wrong, back in the day they wanted the property back. If there was $200,000 in equity, wouldn't they force a sale or?
Well, they'd force a sale. They can't just take it back. They would try to force a sale.
Take the 200 now.
But it very seldom happened because most people filed the homestead law and got to keep their property anyway. So.
But what about now being $200,000 in the hole? Of course they don't want it back.
Well, nobody wants it back now.
Right. So now they're telling us to go find a real estate agent and short sale.
They're like, go sell it and at least liquidate and release the lien and move things on.
And then
but it still gets discharged to the thing.
And now you have a better chance of coming back in a few years to buy a home versus waiting 5 to 7 if you let it go to foreclosure.
That's exactly right, brother. So that's exactly right there. So, I don't know, guys. We're just, I'm almost out of things to say because I get so amped up around loan mods. Loan mods don't work. Nope. And this is public information. It's not anything that we know that nobody else knows. It's just nobody else wants to talk about it.
I'm going to let you wrap it up.
Yeah, I'm just going to tell them, get over your loan mods, guys. Get over your loan mods. If you've been waiting 6 to 9 months for a loan modification, you're not getting the loan modification. Hire a professional. Get in there and lean on the lender. It's just what we do with short sales. You're better off short selling the property. Discharge the debt and move on with your life. Why not create a real solution? So anyways, I'm digressing because I'm getting so wound up. So hopefully we made a little bit of sense to you guys and created value for you today. But really consider what your options are. Short sales, bankruptcy, foreclosure, deed in lieu. There's a lot of different things you can do. I could come up with a whole list of them. And there's some pros and some cons. They're not all good, but ultimately short sales are going to benefit the market, benefit you, and they're going to discharge the debt. I challenge you to take a look at it. This is ArizonaShortSaleTV.com signing off. We'll see you soon.
And just one last thing.
Shoot.
The alternatives to foreclosures right there. If they want to dive in and get 9 or 10 alternatives right there, just go to the right, fill it out, and you'll get the PDF.
Right there. Even if you can't figure out a loan mod, I promise you can submit that.
Yep.
I'm just playing. I'm just taking shots at you guys. We'll see you soon.